because I'll have to get him on the network.
Trying to reconnect.
All right, you guys are live on Mevo.
All right. All right, we had a little false start, but hopefully we can get it going here.
But you have a full half hour to work on it.
Yeah. So this is Jeff Tufford. I'm here with Stephen Melcher from Berkshire Hathaway, and his office is in Fenton. And this is the Epic Mortgage Real Estate Q&A live on Facebook. We want to make sure that everyone has a chance to ask some questions, so hopefully we can get to all of them. I guess Zach's probably going to have to be watching those for us as they come in. But anyway, we want to talk about zero down home loans because a lot what we talked about a little bit ago.
First-time homeowners are trying to get into the market, now don't have a lot of money, so they try to find ways to get into it without a lot of money.
Right. And you know, people
divorcees.
People like to wait for tax time,
and if you're waiting for tax time to buy a house, you're going to be in a competitive market when everybody else has their money. So why not try to get ahead of that game?
Because that's spring. Everyone's trying to start to buy in the spring. Seems like so you can actually get a good deal now and not have to wait to save it up.
Prices go up in the springtime.
They do, exactly. So we have seen a little bit of a dip in the price. It's small because there are ebbs and flows, but usually around this time you see one of those ebbs, those little dips. All right, so here's who we are and what we do. That's what I want to talk about first. I'm Jeff Tufford with Epic Mortgage. I've done mortgages since 2003 and went through the whole crisis and back out and hung on for dear life. And it's been good. I enjoy what I do. And Melch, tell us a little bit about when you got into real estate.
Stephen Melcher from Berkshire Hathaway. I work out of the Fenton office, but I do all 3 counties. I got into real estate just about the same time Jeff was doing loans. So we saw the whole downturn and we fought it all out. But it was a good time to learn because we learned a lot about different loans, different ways to be creative to help people get out, get a home, and that's about it.
Yeah.
Right now I'm doing quite well.
Yeah, the funny thing I like to say is I got into it right after the time where you just sat there and the phone rang and people said, what's your rate? I want to refinance. Like the phone just rang and rang and rang so much that, you know, people were delivering pizzas at night saying, what's your interest rate? I can refinance you tomorrow. It's my day job. So I got in after that. So I didn't get all that easy stuff, the easy money. I had to work for it. But we both enjoy what we do. We've worked together for a while, so it's a good combo, a good team. We know how each other works, so that's always good, so that it's not, you know, people aren't stumbling over each other, not knowing what's next and everything. So we already got that figured out. So we wanted to talk about zero down mortgages, and the first one I want to mention is I'll mention it briefly because it's like another topic for another day. But VA loans, Muscle's going to try to get his going. There we go.
Stuck on the screen.
Thank you, Zach, our technical supervisor.
iPhone.
Zach.
I have no idea what
iPhone.
Oh, you're a Google user.
He's a Samsung boy.
Yeah.
All right, so just like me.
Come over to the eyesight.
Samsung is not paying us for that message. But VA loans are zero down loans as well. They're only for veterans, so it's a smaller piece of the market. So there's less, you know, people that can get those. There is a good number, but I imagine the general audience that will watch this video is probably not in that category, so I'll do another one another day for that. But we're going to talk about the top USDA, or I should say the top zero down program, which is USDA. Giving myself away there.
Also called rural development.
Correct. So he's right. You'll see it called RD or USDA or rural. And Melch, as far as that goes, just to kind of get rid of one of the, the misconceptions about that. When you hear rural development, are we talking about an area in the middle of nowhere that's really rural with all dirt roads and cow everywhere you turn and stuff like that?
Well, sort of. But there's a defined market.
The city of Davison is not like that.
But there's a defined area, and most of that is right around the Flint city limits, a little bit outside of that. But anything south of Hill Road, Reed Road, anything west of Dye Road, I use that.
Elms
Road, thank you very much. Stanley on the north,
yep,
and
correct.
Vassar on the east.
Yep, that's correct.
So if you're anywhere outside of that, most of Oakland County is not going to be rural development. There are some small pockets. A lot of Livingston County is rural development, but there's a lot of areas in Genesee County that are also rural development.
All right, cool. Well, Zach, take down questions there if as they come in. We'll go over the program a little bit before we start doing that, and we'll get more into the area too. But loan qualifications, briefly, if you've heard of FHA, they're very similar. We can go down to a 600 credit score. And let me just say, I don't have the company one, but my NMLS is 160841. I think I'm required to say that. Anyway, the loan qualifications are similar to FHA. There's a little bit some nuances there, but we can do a 600 credit score. We have a great credit repair program for folks who are under that. We really like to shoot for over 620, and then even better is over 640 because there's more risk associated with lower credit scores, so that ends up being a factor in your cost on your loan. So keep that in mind. But it really is zero down. But does that mean zero out of pocket?
No, I was just going to say, I was going to chime in there and say most people when they say here's zero down, they think they don't have to pay any money. You're not paying a down payment.
You're not creating equity.
You're not,
Which is what a down payment does. So there's still other costs.
But you're not paying any money down, but you still have to pay your closing costs.
Correct. So that is a common misconception that down payment is different from cash out of pocket. Down payment is the equity that you're required to purchase in order to get the loan to qualify. So this is a zero down. So there are some costs. We'll talk about that in a moment. I'll ask Melch how he deals with that for helping our clients to truly try to get in for as little out of pocket as possible. Sometimes it can be zero, but just don't have the idea that you're going to go in with no money out of pocket. You will have to put some out no matter what. Whether you get some or all of that back is the question. So 600 credit score is possible, but again, more cost there. So we want to see a 640. We can help you get there with that. There are obviously bankruptcy issues, bankruptcy foreclosures. They have to be over 3 years old. There are some exceptions to that where you can do it at 2, but it's tough. Yeah, self-employed is okay. You really want to, they're a little bit more strict than FHA on what you can qualify for based on your income, the percentage of income they let go towards your house. So with that, self-employed, you really want to deal with someone like us where we can try to get you as much as possible as far as calculating your income, because some people are pretty conservative. We are allowed to be pretty liberal with that. So you really you don't have to have any more money than you need to close. It's called reserves. You don't need reserves. Your credit can be, as long as you don't have a bankruptcy or foreclosure in 3 years, judgments need to be paid. But other than that, if there's collections, a lot of times we might just say if you have $3,000 in collections, we have to take a portion of that and add it to your monthly payment just to kind of calculate that in there when we qualify you, but we don't have to make you pay those off. And medical collections don't count. So it's pretty cool. It's qualifying. Melch has sent us a lot of folks that maybe wouldn't qualify somewhere else, but we've been able to qualify them.
Mm-hmm.
So it's been pretty good. We've had some tough ones, and we've got them done, right?
If you can't get it done, nobody can.
So, Melch, the areas we talked about before, just to reiterate, we said east of Vassar, right?
East of Vassar.
So that's basically Davis. If you're in Davison, Goodrich, you're good.
Your rural development eligible.
Okay. And north of Stanley, which would be, what is that, Genesee? Yeah, because I just looked at one yesterday, and it was just north of Stanley on Mott Lake, so it was actually Genesee mailing address, which you don't see that every day.
That's true.
48, I can't remember the zip code, but north of Stanley is Genesee. What else is up there? Clio,
Wasso,
part of Mount Morris, I think a little bit.
and Flushing.
Okay, yes. So a lot of Flushing gets caught inside the box, so you just be careful because it was west of Elms. So Swartz Creek, a lot of Flushing. And then the south part's a little trickier. Reed Road is on the west side of the county.
And then it's Cook Road on the...
Or McCamish.
McCandlish
on the east. So what happens is it goes across the McCandlish Road, up 75, and then over Reed. That's the only one that's a little tricky. But what you do is when you're working with Melch, he'll either look it up or he'll call me and say, hey, is this address eligible? We can find out pretty easily. I have a little look-up tool. It's very simple.
Pretty much because I know where the boundaries are. I know what's rural development qualifiable. But we never guarantee anything until it's actually checked.
Yes, and sometimes you will see a listing that says LRD for one of the eligible programs, and then we find out when we look at it, we're like, no, that's not RD eligible. Some agents don't know all the boundaries like he does.
And the misconception is that rural development can be done on a condo in certain situations.
You're saying that people don't think it can?
People think that rural development can't go on condos.
Yeah, they think it can't. We definitely can. And so that's a pretty cool thing too that we can do. We actually can get them approved on an individual basis where they don't have to be on some kind of you know, if they're on the FHA approved list, they're good. If they're on the VA list, they're automatically good. But we can actually take it a step farther and approve them one at a time, which we've done. So we've talked about areas, Melch. Oh, Fenton, where you're from is totally
South. I look at Hill Road. Hill Road's kind of, for me, the boundary. If you're south of Hill Road, you're gonna be good. So you should be good most places.
So Fenton and
Fenton
Linden
is
are totally
definitely
good. All right,
Yeah,
and then
Holly.
Yep, you mentioned Oakland County. I had the map. Is the map in there, Zach? I don't think it was very hard to read, but it's really, there is no like, you know, listing
Defined
5
area.
streets. It's all over the place.
Right.
So like there's very little. He's right. Clarkston, you get into Clarkston, it's too far. Oxford's good, but you get into
There's some limits.
Lake Orion, you're bad. It's over. And then the same thing on the east side, part of Holly. So just
If you look at your northwest corner of Oakland County, you're probably gonna be good for rural development. If you look anywhere else in Oakland County,
that's why they have
don't
us.
expect it.
That's why they have the experts.
But
right?
we'll check, we'll always check.
All right, cool. So let me talk about the conditions of a home and then throw it to Melch for how he handles that. So conditions of the home, that it's not super special. Like we have to make sure that there's no peeling your, basically they use FHA's guidelines. They
Right.
straight up use them. They say our houses have to conform to these guidelines, which is kind of smart because they didn't have to create their own from scratch. They just stole someone else's. Government stealing from government. You don't see that every day, or do you? But anyway,
I think you really do.
so
Isn't it robbing Peter to pay Paul?
yeah, kind of the same thing. So they, you know, peeling and chipping paint's a big one, and then safety issues mainly. Like, it's not, they don't necessarily have to have a handrail, but if it's a dangerous staircase, they do. There's
2x4s work very well.
yeah, yeah, exactly. Broken windows, things like that. Things that are exposed wiring, things that are be dangerous,
Peeling vinyl and that kind of stuff.
right? So when you go through a house with a client, are you looking at that with them?
I have a good idea of what FHA is going to look at, but usually you'll hire an inspector that is going to be that knows a little bit more about FHA, so that they can help us point out what's going to become an issue, possibly.
Right, and if there's any questions, they can call me even and say, well, there's this issue, and I'm not going to guarantee anything either, but I'll tell you what I've had an experience. Every appraiser is different, so one might say, I don't care about that. One might say, oh my gosh, that's terrible. We have to make sure that gets
And I've
fixed.
had that situation where I'm like, oh, this is going to be a big issue, and then they go out there and they're like, no, it's not a big issue.
Right.
Okay, as long as it goes through.
So, and when there's repairs, you get to negotiate that, correct?
Well, we were talking about two different things. If there's repairs, we can put those extra money in escrow for you to get those repairs without putting money out of your pocket. There's a limit with rural development. I always have to call my buddy Jeff to find out exactly what that is. But other ways to get into a rural development, as we were going to discuss, is that we can ask for the seller to help pay for some of the closing costs. It's a little bit tricky in how you do that, dependent upon the house.
Sure. So that's another thing I was going to mention are the costs. You know, since we talked about it earlier, you're going to have normal mortgage costs. You have to put in, basically you're putting money into an escrow account for future taxes and insurance, and you're also paying the seller back for taxes that they paid ahead, because in our counties, we pay ahead. If a county's different, then that'll be different, but that adds up to about a year worth of taxes. Actually, we say 13 months.
Mm-hmm.
A year of insurance, a couple months into escrow. And then you have title fees, you have an appraisal, all these things that are just normal stuff that you're going to have no matter what you do, no matter which program you get, no matter where you go. A lot of it's third-party stuff from the title company, from, you know, to the escrow. So when you do that, how does actually getting concessions work? If you can explain that to them.
Sometimes when we make the purchase price, we ask for 3%, which is usually a standard when you're asking for concessions. And it's either sometimes we raise the price by 3% just so that the seller's not taking a hit, but it all depends on how the seller's looking at what their bottom line is.
Melch, you're being
Is
too
that-
conservative. 6%.
I can do 6%. It's not. I've
No.
only seen it a couple times. I'm going to be honest with people. I'm going to say I've only seen
Yeah.
it a couple times. But that's where we have to play with the numbers. Do we go up by
Sure.
3% and then ask for 6%? Then it doesn't hit the seller so hard. Not that we should be worried about the seller, but it is what's going to make their decision.
When there's a bunch of offers on the table, they're just you work both sides. So you know, as a seller's agent, sometimes they're going to look at this deal's for more money, but they're asking for us to pay concessions. So when you do all the math and you say, what am I going to get when it's all said and done, you're usually going to take the higher number, right?
The seller's gonna be like, seller's just like any buyer.
Right,
What's
exactly.
my bottom line? What am I gonna get?
What's the best deal?
So I try to be as creative as possible to help the seller get their bottom line as well as getting my buyer the house that they want.
And then it just has to appraise high enough, and then everybody's happy.
Right.
So basically, in a less competitive situation where you're the only offer, you might have a better chance of
You're
getting more money
much
back
more likely to get it
than if
through.
there's 5. Okay, perfect.
If you're in a competitive situation, usually there's gonna be a cash offer in there and there's nothing you can do about that.
But I will give you a little point here. If you are under, like if the appraisal comes back at 105 and you have a 107, then purchase price, then you're gonna have a problem. We're gonna have to lower that down to the 105. Either the seller takes the hit or the buyer backs off concessions, or we come to some agreement. But that doesn't happen all the time.
I
But
have a deal right now where I'm trying to work that situation out, where the appraisal came in low, and so we gotta be creative and still helping the buyer out, but helping the seller make his bottom line.
that's why we say if you have no money in your bank, you have $0, it's very risky to try to go into a deal and hope that you can get in for no money out of pocket, and then if you can't, then the deal falls over like a house of cards. It's like we don't want to see that. So we can shoot for the moon, but if
We shoot for the moon and find out how much of the moon we're gonna get.
right,
So if you're in a competitive situation, unfortunately, rural development is gonna be the least likely offer to get it if you're asking for concessions.
all right. So let's talk money out of pocket. When someone comes in to buy a house with you, what do they pay you?
Say that again?
What do they pay you when they come out? Do they pay you?
Who? The buyer?
Yeah, they go see houses.
No.
No, they don't pay you. Okay, so then do they need any cash at any time on your side of the transaction up front when they're buying a house?
No, the only thing you really need is a pre-approval letter. That's what's gonna, I give most people a free day to go out and find out what kind of houses they like and that, work with them that way. Oh, wonderful.
You got a message. Well, I was leading you toward the EMD, is what I was trying to
Well,
get.
the EMD doesn't come in until after we find the
Right, that's what I
house.
meant. When they're out of pocket, before they ever buy the house, what money's coming out of pocket?
Oh, okay, in the buying process, you're gonna have the EMD, which is gonna be money that's gonna go towards all the purchase of the house. Then you're gonna
How
have,
much is that usually?
usually I go about 1% of the purchase price of the house.
Okay.
But
$500,000.
depending upon the clientele, if they don't have a lot of money, we can work that out. Then the other thing is gonna be the inspection, which usually runs right around $300. And then the last thing would be the appraisal, which is.
$425. So
So those are so you're figuring maybe.
$2,000.
If you're under $2,000, you should be able to you should be fine out of
Okay.
pocket.
So if you figured 2,000, let's say and you're trying to get the seller to pay for everything, you have another $2,000 in the bank in case it doesn't work out. That's pretty safe. 4,000. Or if you have like a parent or someone who can give you a gift, that's pretty safe if you have somebody available. We want to know that up front so we know that this isn't on a wing and a prayer, you know.
Right.
So all right, so that's all we want to talk about as far as just off the cuff here. Do you have any questions there, Zach? I know we got multiple streams here, so.
All right, so we do have a couple questions that came in. First one, what if it's a duplex? If the property is a duplex?
Well, Melch can tell you there are some duplexes out there. Here's the thing with RD. They will not let you buy a property that is going to be or could be a cash producing property. So I've had problems with even having a mother-in-law quarters in the basement it was a walkout, so you could walk in and out without going through the house. So it could be looked at as a duplex even though it's not. So anytime there's an apartment in the garage or anything like that, it's going to be a no-go for RD. But we can do that on an FHA, so if you had a little down payment, right? So
Or conventional,
right, exactly.
which we love.
Yes, we love them all. I love mortgages, period.
Here's another one. How do I schedule to see a home if I find one that I like?
Well, you give me a call or get your agent, hopefully it's me. And if I'm available or the house is available, usually we like 24-hour notice, most people, but I've been pretty successful getting people in within an hour's notice. So you just give your agent a call.
Now, that question brings up another point. These, as folks want to buy a house, they get really excited and they jump online and they start looking and they're pretty excited. You recommend, and I recommend, getting pre-approved first, right? So that they don't fall in love with the house and then.
The worst thing to do is to fall in love with the house and find out you can't get it. It's better to know how much money you can spend and what your budget is. And I'm really good about making people fall within their budget. If they find something that's outside the budget, I'm going to tell them it's just not going to work. unless you've got a secret bank account that I don't know about.
All right, Zach, got another one here?
All right. Can we roll in costs?
Okay, so just like the repair escrow, closing costs can also be rolled in. So let's say the closing costs are, what's not just closing costs, that term kind of trips people up. Closing costs and prepaids both, which is all the taxes and insurance, which is a big chunk. If, let's say that's $5,000, just to throw a number out there for easy math, and the seller's paying $3,000. So you got $2,000 extra, and it's a $100,000 house. If it appraises for $102,000, we can roll it in and just do your loan for $102,000. That'll probably cost you about $11 a month to do that, as far as the payment goes. However, if you want to keep that couple $1,000s in your pocket, so that in case something goes wrong down the road with the water heater, or you want to replace the furnace down the road, or anything like that, you have the money, a rainy day fund, so to speak, then that's an option that's available to you. So a lot of people like to do that. They like to get in with as little out of pocket as possible. So if it appraises, you're good. Now I will say this is the only program you can do that on. Like, you can't do that on FHA, you can't do that on conventional VA, you can never roll in the costs. I mean, basically, like Melch said, we can get concessions, we can bump the price up on the contract, but this is happening after the fact. We get the appraisal and we say, hey, and I just had this happen. I have a guy named Kevin right now, where the appraisal came back and it was, hey, your appraisal came back $2,100 higher than your purchase price. Do you want to utilize that instead of coming out of pocket with that $2,100? And he said, yes, I do. So perfect example, that it does work, but this is the only program.
Doesn't change the mortgage payment, so it makes it.
Oh, it changes the payment,
A little
the
bit
$11,
lower.
right? Doesn't change like taxes, insurance, any of that stuff. So you're good. Closing costs don't change because of the loan amount going up a little bit.
All right, this one might be a good one for Melch. Are there any move-in ready homes in these areas?
Oh, like the Davison, Fenton.
Yeah, move-in ready.
Yes, rural development has a limit as far as how much the loan can be.
No, that's actually just income, which I should have
Okay.
mentioned that and I didn't. I actually had that printed out.
But yes, there are some move-in ready homes. Those are when you get into a competitive situation. The homes, it depends on the price range. If you're doing rural development on a $275,000 house, most likely it's gonna be move-in ready. You're talking rural development on a $100,000 house, you may have to have some work done to the house.
And it can't actually be that much off of move-in ready because of the repairs that are going to be required. So most of them are in good shape if they're going to be able to go rural development.
Exactly.
But I will mention this about the income limits. There are income limits, so that's the two things that make a difference between FHA and rural development. The most, when you're looking for a house, there's income limits for based on how many are in your household, whether or not they're on the loan. And just to shoot it from the hip, it's 76,750, I think. I forgot to I printed it. I forgot to bring it. It's we always say around 76,000 to if you have 1 to 4 people in this county. Oakland County's higher, Lapeer County's higher. It depends. So you're going to want to talk to us. And then if you get have 5 or more people, like we in my house, we have 7 because we're crazy. But anyway,
Yeah, you are.
the dog doesn't count, or else you'd have 8. But with 7, it's even a higher number. It's I think it hits up closer to 90. So we can look that up as well. So that does play into it. And then there obviously is the area. That's another difference. But the cool side is there is no limit. So if you have a bunch of people in your house, you can make enough money to qualify for a $250,000 RD. You can do it.
Right.
What's next, Zach? Anybody else chiming in?
A couple more. What if someone's chiming in?
Melch is a popular guy.
So, this next one. What if the seller will not make the repairs?
The seller doesn't make repairs. There's a couple options that we could do. If he doesn't want to do repairs, we can ask for money off the loan to cover the cost of those repairs. So
Or you put it in the escrow and repair after.
or we can put it in the like an FHA 203K, similar to that. Or we ask for a reduction in the price of the house.
But as far as the repairs that we require,
but
that's when that has to go in the escrow because we have to know it's going to be done. So basically, we get a bid, 2 bids. The higher bid, we take really it's like 150% of that. So if it's $800, so we'll do $1,200. It goes in the escrow. After closing, the buyer owns the house. Yay! They get the contractor to go out. Let's say it costs $900. The seller gets $300 bucks back out of the $900, and the contractor gets $900, and it's done.
Right, but if it's structural safety or health-wise, those are the things that we really try to get the seller to fix. And most sellers will fix if it's a major thing. If it's cosmetic or simple little things, most likely they're not going to do it, so just be aware of that.
What's going down?
We're still live on 2 streams. We lost one.
Oh, we lost the main one. That's
Yeah.
pretty cool. What happened?
It says lost
It's-
connection. We're back.
Okay,
We're back.
but not recording yet.
Goodbye, hi.
Yep, we're good.
Okay, so I wonder if it like
We're
made
back.
it 2 different videos or one.
It should be the same stream. It just
Okay.
lost connection.
All right, cool. So that's the repair issue. He's right. If there's major stuff, it really like has to be done before closing because
Most sellers will take care of
we're not gonna put our money out there on a house that is gonna be a problem and the buyer never fixes and then they lose it and then, which obviously God forbid that happens, but then we have a house that's got problems. That's just how lenders look at things. It's
And it's also dependent upon the seller situation. If it's if they're in a strapped mode, they're not going to do any repairs. So we have to. So I investigate, find out from the listing agent what's the situation for the sale.
I've had minor repairs where like the seller's away or older and can't get out, and like where they say only with permission, the buyer can go ahead and scrape and paint that windowsill, and then as long as everyone agrees, it's you have to have permission, but that's been done before. Don't get worried, Melch. I'm talking about with permission.
No, I don't recommend anybody doing any repairs until the house is theirs.
But I mean, a lot of times
The
people
buyer
for
doing it.
$25 a paint and
Right.
half an hour of their time, it's not a huge deal. Got another one?
What about manufactured homes?
Okay, manufactured homes don't work with RD unless except for like a tiny little sliver of possibility, which is like I've never even seen. So it basically is a manufactured home that's moved from the park to the property and connected and never lived in. So let's say you have a builder who decides, hey, I'm going to build a subdivision of manufactured homes, not a mobile home park, but they're going to own the lot and own everything. It's going to be on a permanent foundation, and they put it there, and then they sell it to you as a new build. That can be done RD. Anything else, if it's ever been lived in for one night, doesn't work. So we do have good programs for that with FHA with 3.5 down.
So manufactured homes are very tricky with rural development, even with FHA.
With FHA, we can knock it out though.
You
got
do.
this, we
You
got
do
this.
knock it out. We've done a couple of them together, and it's been really easy.
All right, what's next, Zach?
Just a couple more. What if I have to sell my home first?
Go ahead, Melch.
We can do a contingency, but again, if it's a competitive situation, people don't want to wait for you to sell your home to buy their house, so that's going to be a ding against you if you're in a competitive situation. But I have done many of them where I've said it's contingent upon the sale of a certain house, and people have waited.
And it's a good point because we have to, like, you cannot own another house unless it's
Right.
like dilapidated, which we have to prove, or if it's in another state and you had to move here for your job. Very rarely can you ever own a house and buy an RD.
And that's what's called a contingency.
Right.
And usually if you put a contingency and the seller accepts, you have 72 hours if another offer comes in to either remove the contingency, move forward with the deal, or back off.
And we can actually close simultaneously. We've done that before, where
I've been
one
successful,
sells
I've
and
been
one.
successful with contingencies.
Yep, and they sell and they buy and they on the same day. Your house is sold and you purchase your new one on the same day. So it's pretty.
But with a
Pretty
contingency,
good.
you have to make a very strong offer.
That's true. All right.
All right, it's the last one that I see here. Can we buy a farm?
No, that's another
I know
sad
it's kind
story.
of weird. You can't use rural development to buy a
Exactly.
farm and it's in the
Right.
rural area.
So this is kind of weird, and
Was there an acre limit?
not particularly. I have had to go verify that a property couldn't be split before, but with the farm situation, again, money making, that's their hang up. So I've had
It's a money-making property.
I had a house, you'll never believe this, and it had a shed in the back. It was wood, it was literally as wide as this desk, a little deeper. And we got it 2 RD. So with RD loans, the thing that happens once we're approved, have them all approved, it has to go to RD and RD has to sign off on them. Right now it's taking like 3 business days. So it doesn't put on too much extra time. But it got all the way to RD. RD looks at it. They don't hardly ever come back on our loans and ask for more stuff. But on this one, they said, we need pictures of the inside of the shed. Because why? Well, it could be a chicken coop. Like they could be raising chickens and selling eggs. I'm like, are you serious? What does that have to do with my buyer, what the seller's doing now? But same thing with barns. I mean, we've had, I had a guy, I won't say that I did the loan, retract that, but I know of a guy who bought a house with RD, and he was buying it, he was already renting it, and his father lived next door and was keeping a farm like a tractor in the garage.
Mm.
And if there's farm equipment on the property, it's no. So they had to move the tractor to get this loan with unknown company, and they had to move it out of there before the appraiser came out because his house wasn't farming at all, but he was surrounded by a farm, and so his dad was coming and parking the tractor in the barn, so he had to take it out. So just goofy.
So you
That's
can't
kind
buy-
of goofy.
So you can't buy 5 acres on a rural development?
No, you can.
Okay. I mean,
It
just
just-
want to make sure, there's no restriction as far as the size of the property, but there's a restriction if it's an income producing property, if there's any
Well-
kind of income producing on the property.
It's a little gray there too, because there's, I mean, and I
Everything's
can't remember. I think the rule. I gotta check the rule to see if it has been changed, but they had it where if it was 20 acres, I had to prove that for some reason this property couldn't be split, because then they could sell part of the property, even though there's a lien on it. They couldn't really, but
Right.
that was their worry. They would try to sell part of it, and again, income. It was weird.
Okay.
But is that all we got, Zach?
Let me check the streams one more time.
What are you looking at?
We're
Okay.
moving.
So
Here's
Zach,
one more.
okay.
What is the lowest down payment percentage needed with FHA?
3.5%. So 3.5%. Cool thing is, as with RD, any money you need, both of them, you can do a gift, which is from a family member. They just sign a form that shows that they are giving you the money. It's not a loan. They prove that they have the money. With FHA, they just give us a 1 month bank statement. RD, they just have to prove that they've had the money in the account today, not even a whole month of a bank statement. So there's the gift. You can also sell stuff. If you do that, you have to let us know, and we have to properly prepare you for what paperwork you need.
Document it.
I've had people sell a car and they didn't do a bill of sale, they didn't do this, they didn't do that, and it's a problem. So you could also take out a loan against something if it's secured. So if you have a free and clear car, you can go to your credit union or whatever and get $5,000 in a loan as long as it's secured against the car. We take that car payment and factor it into your loan, but as far as like what you qualify for, but I've had people that have done that. So 3.5% though is the minimum that you have to have. So if the sellers pay for all closing costs and prepaids, that'd be your out of pocket. If not, you'll have to have obviously a little more. What we do, Melch will call us and say, hey, these people want to buy this house. What do you think of that? Can you run some numbers? And we actually plug in the numbers as if we're ready to start that loan on that exact house. So we can tell you, you need this much money. If you ask for this percentage from the seller, you'll need this much money.
Mhm.
And we try to do it as accurately as possible, as much as we can,
And as quickly as possible.
and as quickly as possible. That's true. He loves it when we're quick. So, anything else, Zach?
That's all.
That is all. All right. Well, it's been a pleasure.
It's been super fun doing this.
Yeah, was fun. We gotta do it again. So it was fun doing this Q&A. This will be on our stream. We'll all make sure that we post so that it's available forever. If you didn't get to check out all of it, you'll be able to come back and watch it. You can share it with your friends and family. And of course, how can we reach you, Melch, if someone's looking to buy or sell their house and they need a cool agent that can take care of it? How will they get a hold of you?
Cool agent. Let me find one. No,
Oh man, you're so modest.
You can contact me directly at 810-513-1561, or you can go to my website, stephenmelchergroup.com.
Which actually has a form that you can fill out to get pre-approved
directly through
with us.
Jeff.
So our office number at Epic Mortgage is 810-606-1075, and I have a team here that's ready to help knock it out of the park, help you get into a home. If you have credit issues, like I said, we get those fixed for free. So that's pretty sweet. Major stuff can be taken care of for free. So I don't know anybody else is offering that. It's like legit credit repair. So call us and we will take care of you, and we will help you get in a zero down loan or any other program that works for you. All right. Thanks a lot, guys. We hope you have a great night. And we're going to have to shut off like a bunch of different things at one time. And that didn't work. Just to kind of get rid of one of the, all right, let's see. I don't know, the misconceptions about that. When you hear